I know you haven't got enough budgeting yet, so here's some more budgeting excitement. We've figured out how to get the product cost elements under control in our budgeting. That is the direct materials, direct labor, variable overhead, and fixed overhead. Now we're going to work on our period costs, selling and administrative. What do we need to do it? You guessed it, more assumptions. So we're going to have some assumptions here. The selling and administrative is broken up into variable and fixed. The variable selling is 50 cents a unit. Fixed is 70,000 a month. And the fixed includes 10,000 of depreciation. Why do we care? Because remember, those are not cash outflows. So they won't be affecting any cash disbursements. So to figure out our selling and administrative for the quarter, we're simply going to take our budgeted sales times our variable rate to get our variable costs, then we add our fixed to get our total expense, then we take out our non-cash to get our cash paid. And we do the same for the other months. So it wants to know what the selling and admin for the quarter would be. So you can go ahead and try to calculate May and June. You just need to know what May and June sales are. And then you can go through and multiply that by the variable selling and administrative rate to get the variable. The fixed are going to be 70 across the board, and the non-cash will be 10 across the board. So take a minute and see if you can calculate it. Before you do, I want to point out that because we're doing a selling and administrative expense budget, it's based on sales, not units produced. When we were doing our direct materials, direct labor, and overhead budgets, those were based on units produced because those are product costs. Selling and administrative costs are selling costs. They're based on sales. So go ahead and give it a pause and try to fill out the rest of the schedule. If you did it right, you should have got 230,000, which is what you get when you fill in the May and June columns. Because these are expenses, to get the quarterlies, you add them across. So 20, 50, and 30 is the 100. The variable is 10, 25, and 15 for a total of 50. The fixed is 70, 70, and 70 for 210. Add that up, you get 260 minus the 30,000 in non-cash, which is 10,000 in depreciation each month, get you your cash disbursements of 230. Just following the rules, following the assumptions. Now we're going to prepare a cash budget. The cash budget's going to tell us what happens to cash. All it's going to show is the cash in minus the cash out. We've done all the hard work for the cash budget because we figured out what our cash receipts were and our cash disbursements for our various expenses. All we're doing now is putting those numbers into a nice, pretty format. So the cash budget is divided into 4 sections. You have your cash receipts, your cash disbursements, then you subtract those and you get your cash excess or deficiency, and then you have a financing section where you have to determine whether you need to borrow money so you don't run out. We need some additional information. It tells us we maintain a 16% open line of credit for $75,000. We have to keep a minimum of 30 grand on hand. That's the buffer zone we'd like to keep. We borrow on the first day of the month. We repay on the last. Why do we care about that? Well, because it's going to determine how many months the loans that we have been outstanding. We're going to pay a dividend of $49,000 in April, and we're going to buy equipment of $143,700 in May and $48,300 in June, paid in cash. And then we start the quarter with a $40,000 cash balance, which would have been May 31st ending cash. So we start with our beginning cash balance. Then to that we add our collections, which is from the schedule of cash collections. I recommend that you scroll back in the PowerPoints to find it, but we did already calculate that number. Then we're going to add in all of our disbursements, which come from our various budgets. The materials comes from our schedule of expected cash disbursements for materials, labor from our labor budget, overhead from our overhead budget, selling and admin we just recently did. And then we have our equipment purchase, which is 0 because it didn't tell us we bought anything in April. We made purchases in May and June. And then we did have a dividend of $49,000 in April. So our cash available is $210. We pay out $228. So we have a deficiency of 18,000. Because we want a minimum of 30,000, we need to borrow money. So we're short $48,000. So 48,000 is the amount we would need to borrow in order to achieve the 30,000 required minimum that I want. So for May, we're going to get our beginning cash balance, which comes from, the previous month. So ending from April becomes the beginning of May. We're going to add our cash collections from our cash receipts budget, and then we get our material disbursements, labor, overhead, selling and admin from all of our previous budgets. The equipment purchase was given, and that gives us disbursements of 400. So now we compare the 440 to the 400, and we have an excess of $40,000. Now, technically, because we have 40,000 and we only need 30, we could pay back $10,000. For some reason, the textbook decided, I guess, to simplify things and only pay back the loan at the very end of June. But technically, to be 100% accurate based on the assumptions, they said that we borrow at the beginning of the month and repay at the end. We should really repay $10,000 in May because we have excess. They didn't do that in this example, so I'm not going to go out and do it, but I just wanted to point that out. So if a problem does say that you're repaying at the end of the month, because we have excess cash, we should technically repay some of that loan. You can go and fill in the June column and answer what the disbursements are for June. So it says cash available over disbursement. So it's the excess or deficiency. So what it's asking you is to figure out what this number would be. So if you want to take a minute and try, go ahead. And you should have got 130,500. So how do you get that? Well, the ending May would be the beginning for June, cash balance. Then the cash collections comes from our previous budget to get our total cash available, and then all of these other numbers come from previous budgets. The 48.3 is the amount that we're paying for property and equipment, which was given in the problem, and then the difference between the 400 and the 269,500 would give us the excess that we have. Now it's saying we're going to pay back our loan. Our loan was 48,000, so we're going to pay back the entire 48,000, and then we have to pay interest. So our interest is the principal of the loan. You have to remember this formula from 503 times the interest rate times the number of months outstanding divided by 12. Don't ever change the 12. There's 12 months in a year, and interest rates are presented on an annual basis. Why is it 3 months? Because it said we borrow at the beginning of the month and we repay back at the end of the month. So we borrowed at the beginning of April, we're repaying at the end of June. So 3 months the loan has been outstanding. So that gets us the amount of interest that we need to pay. And then that gets us our total financing, which we take the 135,500 minus the principal and interest of 49,920 to get our ending cash of 8580. Notice when you're doing the totals for the quarter, the beginning cash balance comes from April. You don't add them across. The cash collections get added across to arrive at your total cash available. Same with all the disbursements. But the ending cash balance for June would equal the ending cash balance for the quarter. We don't add those across. So balance sheet items, we don't add across. So the ending cash is either from the beginning or the end of the quarter, whereas all of the cash receipts and disbursements get added across because cash flows are for a period of time, whereas the ending cash balance on the balance sheet is at a point in time. Just one final comment on the financing section. I referred to the textbook, and it does say in the textbook that in the chapter we're always assuming that borrowings happen on the first day of the budget period and repayments happen on the last day. So because we're budgeting for a quarter, that's why the assumption is that we borrow on the first day of the quarter, which is April 1st, and we repay on the last day of the quarter, which is June 30th. Now that we completed our cash budget, we're going to have to create our budgeted income statement and budgeted balance sheet, and then we'll be done with our master budget. So with interest expense from the cash budget, we can prepare our budgeted income statement. Income statement is revenues minus expenses, as you may remember. So we start with sales, which is our revenue, which is the 100,000 unit sales for the quarter times $10. That comes from our sales budget. Cost of goods sold is the 100,000 units sold at the $4.99 cost per unit that we calculated on our ending finished goods inventory budget. Our selling and administrative expense comes from our selling and administrative expense budget, and then the interest expense is the interest expense we just calculated on our cash budget. So all we do is take the numbers we've already calculated and put them into an income statement format, and we're done. To create the balance sheet, we're going to need some additional information. So it tells us that we had some account balances for land, common stock, and retained earnings and equipment. And then we're going to have to figure out what, if anything, happened to these balances with all the transactions that occurred in the quarter through our budgets. So let's start with cash. Our cash would come from our cash budget. So that 8580 comes right from our cash budget. Accounts receivable, we figured out on our schedule of cash receipts. If you remember back, it said 70% is collected in the month of sale, 30% in the following month. So that's why 30% of June sales makes up our receivable. Our raw materials inventory would be our ending raw materials that we calculated, which is 11,500 pounds for the end of June at the rate of 40 cents a pound. Because remember, on the balance sheet, these are all dollars, so we have to convert any units over to dollars. Finished goods inventory comes right from our finished goods budget. It was the 5,000 units that we were planning on having left over at that $4.99 product cost. Land was given in the problem. It's the 50,000. The equipment, it says we started with 175, but if I go back to our cash budget, you may remember we made some purchases. So you can't really see it because this is blocking it. But the 192 is the purchases that we made. So we start with the equipment of 175. We add 192 to that. And that gets us 367 for the equipment balance. And then we have our accounts payable, which represents 50% of June's purchases. Remember, the rule was 50% paid in the month of purchase, 50% after. So that's the amount of June's purchases that haven't been paid. Our common stock is 150 that was given. And then our retained earnings, we have to calculate using the retained earnings formula we learned in 502, which is beginning retained earnings plus net income minus dividends equals ending retained earnings. So the net income comes from our income statement. The dividends came from our cash budget, and that allows us to get our ending retained earnings balance. The beginning balance was given. And then to double check our work, if we did it right, A has to equal L plus C. Hopefully you remember that from Intro to Financial Accounting. If not, we really didn't do something right there. So again, this is overwhelming, I'm sure, because there's a lot of numbers going on and it's coming from a bunch of different slides. But I highly recommend you just kind of chip away at some practice problems. Because on the exam, we're not going to say whip out a budget. It's going to take way too much time. So we're just going to do a small little piece of the budget process for each question. So it'll be much more manageable when you take it in bite-sized pieces. And there's plenty of practice problems that do just that. And there's also additional video resources showing you how to do some of those practice problems if you struggle. So please utilize all those resources to ensure that you succeed. With that said, we are done Chapter 8, but you're not done. You need to go through and crank through practice problems. If you struggle, you don't understand something, don't forget to reach out via the discussion boards to get extra help.